For the last 3 decades, Knowledge Center at Bursa has offered technology, resources, services, space, and a sense of community. Since 1985, 14,000 titles have been collected, with care and attention to high financial literacy standards. In collaboration with a global community of institutions, we ensure access to the world's diverse intellectual and cultural economic heritage, as well as fast online services for connectivity to the financial world. Serving the Bursa Malaysia community and beyond, Knowledge Center at Bursa empowers you in your trading and investment analysis research.
Financial information at my fingertips.
Visit Knowledge Center at Bursa Malaysia today for the collections, for the services, for the sense of community.
Hello everybody, welcome to this webinar brought to you by Bursa Malaysia managed by LifeChamp. So today our topic is trading with GMMA technical indicator. Now GMMA actually stands for Guppy multiple moving averages technical indicator. Okay, so that's why today we're going to learn how to use this GMMA technical indicator to form our trading strategy to find buy signal and also sell signal and how we can use it as part of a trading strategy. So good evening everybody. So thanks for joining us today. If you can hear us, help us to say hello. Okay, let us know if you can hear us and see our screen. All right, so sounds cool. Okay, thank you so much for your participations. So this is Shen Chu. I'll be the moderator for this section. Now, a disclaimer for this webinar or whatever we share on this webinar is only for educational purpose. In no way that we give any recommendation to buy or sell any companies. In the event that we do any case study, it will just serve as educational purpose. So no any recommendation. So if you decide to buy or sell any companies or make any investment decision after this webinar, you're 100% responsible for your own financial decisions. Okay. Now, allow me to introduce our speaker today. Yeah, Pauline is a licensed and experienced financial planner who is certified by the Malaysian Securities Commission, financial planner representative license (CMSLR) and Bank Negara Financial Advisor representative license. So Pauline is also a course trainer and public speaker at Financial Planning Association Malaysia (FPAM) and Bursa Malaysia. Over 25 years in education, she has accumulated over 50,000 students and conducted over 200 large-scale corporate courses. Oh my God, that is a very large followings. So other than being a professional financial planner and educator, Pauline is also a best-selling author who has published 6 books, not only 1, but 6 books on investment and financial planning. So her articles have appeared in financial magazines such as The Personal Money, Money Compass, and many more. Now, of course, if you are keen to get a copy of Pauline's book, you can go to the major bookstore. I think also distribute it. So I've always seen Pauline's book on the major bookstore. All right. So today we are very lucky and honored to have Pauline who come to this webinar to share with us how we can trade using GMMA technical indicator. All right. So over to you, Pauline.
Hi, good evening, everyone. Okay, let me share my screen first. All right. So can you see my screen? All right.
Yes, can see.
Okay, thank you for the introduction. tonight we are going to talk about the GMMA technical indicator. And this technical indicator, in fact, first time when it was my friend introduced to me, it was about 8 years ago. And when I learned about this technical indicator, right, I really find that this was the most useful indicator among so many indicators, because for me, my investment style is always a long-term and value investor. And I find that a lot of the indicators, right, is also usually meant for short-term and then for traders. So, but this GMMA is very, very suitable for a value investor like me, and also for long-term investor like me. So today I'm going to share with you the secrets about this GMMA. And if I introduce to you, if you like it, and then you can use it in your investment as well. Okay, so let's start. Okay, so basically I'm going to explain what this Guppy multiple moving average is. It's called Guppy multiple moving average. And then I'm going to explain how is this tool being used in our investment, okay, and some case studies. All right. So Guppy multiple moving average is actually invented by an Australian trader. His name is called Daryl Guppy. He has came to Malaysia and Singapore for some seminars. And for some of you who have attended his seminars, you should be very familiar with him.
Yeah, I've
And
met him before when I was
yeah,
20 years old.
20 years old. That was
Yeah.
like 8 years ago. Okay, anyway, for
Can't
this
reveal my age.
Gerald Copyright, he's very interesting because he can speak some Chinese as well, a little bit, I think. So this Copy multiple moving average, the word multiple moving average, that means that it is from the moving averages. Okay, and this moving averages, a lot of people, in fact, a lot of the indicators, they said that is lagging indicator. Okay, but however, for lagging indicators, there are some usefulness as well, especially in Malaysia, where our market is not so fast moving, so suitable for use in Bursa Malaysia, and also suitable for buy and hold type of investing style. Okay, so it's kind of you just buy and hold and then collect, and then you can get those value stocks. Okay. So it's a technical indicator that identifies changes in the trend, which means it provides you with an objective method to know when to get in and when to get out of trade. Okay, so it is made up of these lines. So you can see this moving averages like the GMMA from a few sources. So this one that I'm showing you is the chart nexus. Chart nexus you can download for free from the website, and it's the first 3 years of data is free. Okay, so maybe I just type here chart nexus. You have to Google it, and then you can download the free software for 3 years of data. So then you can see this. Okay, you don't have to draw, you just have to see this. However, if let's say you you do not wish to download anything, then I will show you Yahoo Finance. Okay, so Yahoo Finance, this Yahoo Finance is a free. It's not a software; it's just internet based. So what you can do is that you open up a chart. There's a search bar here. You just type any stock that you want to look at it, and then you just open up. And then when you open up, there's one indicator here. So in this indicator, right, you see all these lines. I actually add one by one myself. Okay, so we have 6 short-term moving averages here. And then we have 6 long-term moving averages here. So altogether we have 12 lines, 12 moving averages. So one by one, I have to add one by one. So you add moving average, and then you type 3 days moving average, and then the next one is 5 days moving average, and then you have 8 days moving average, and then so on 10 days, and then 12 days, and then 15 days. So these are the 6 moving averages for the short term. Okay, then I will also add another 6 lines. So these are the 6 lines that I added, which is green in color. So I differentiate them with 6 short-term lines and then 6 long-term lines. So I have the green lines representing the long term, and the short term representing the is represented by the purple color lines. So over here, I can see that these are lines evenly spread out. Okay, so let me explain to you what do they mean. Now, the very first thing is that moving averages, if you learned before, right? Moving averages represent the time period. Okay, so if you have short-term period, it means that the price action usually will be faster, and then for long-term, it's for longer time period. So usually when you look at short-term moving average, if it's above certain averages, then you say that it's short-term bullish. If it's below, then you say short-term bearish. Then long-term is like that also. Above means long-term bullish, below means short-term, long-term bearish. So over here, this indicator is so smart that it separated out these two averages, and then they represent different groups of market participants. Okay, so the short-term moving averages represent the short-term traders, the speculators, the traders. So these speculators and traders, usually they look at the short-term moving averages like 5, 8, 10, 12, all these moving averages. So you group these lines together, and then these lines is represented by these short-term traders' behavior. Then the longer-term moving averages will be the green lines, which is represented by 30 days, 35, 40, 45, 50, and 60 days. So these are the long-term moving averages that represent the long-term investor. Okay, so you see that by one glance on this chart, this tells you the behavior of the short-term traders and also the behavior of the long-term investors. So this is why I like it so much, because it involves long-term investors like me. Okay, and it's slow. And okay, never mind. I will introduce some of the trading techniques that you can use, and you can use it for breakout, which is suitable for traders as well. Okay, so not necessarily that it's it's slow and then it has to be for the investor. No, we have a few strategies, and some strategies are in fact good for traders as well. And some strategy are good for investors as well. So I will introduce each one by one, and then you decide which one you choose, you like, because eventually the strategies that you choose will have to suit your trading or investing personality. Okay, you cannot force something onto somebody. So you must understand yourself first, and then you choose the kind of strategies that suit your trading style. Okay. So let's continue. So the short terms are the red ones, and then the long terms are the green ones. Okay. So you would enter a trade when the trend reversals occur, which is indicated when one group of crosses over the other group. So when short-term group crosses above the longer term, it's a buy. And then when short-term crosses below the long term, it's a sell. So the very first thing that we learn about this Guppy moving average is the trend reversal, or a buy or sell signal. Okay, so this is the very first thing, which is looking at the reversal sign, but there are more than that. Okay, so that's only one. So basically these are the lines. Okay, and it's a exponential moving average. Okay, I forgot to mention it's exponential moving average. Now there are two various types. You have the simple moving average, exponential moving average. Doesn't mean that you have to strictly use exponential. Doesn't mean that you can also use simple moving average, because these two are very close, and then the numbers are very close. It's just that exponential is quite closer to the price action. Okay, and simple will be a little bit lagging, but nevertheless, you can use both. Okay. Now, this GMMA, Guppy multiple moving average, usually the approach of analyzing this chart or using this tool, I have to use together with a few things. Okay, so I number here 1, 2, 3, 4. So I don't just use this indicator alone by itself. usually I don't encourage people to use indicator alone by itself. Usually what we can do is that we will have a combination. Okay, so number one, you bring out the 20-day moving average to tell you the major short-term trend. And then number two, you bring out the 200-day moving average that tells you what is the longer term trend. Then number three, you draw a trend line. And then if you want, you can draw something like this one, the horizontal support and resistance, to show where are the horizontal support and resistance level. Okay, so these are the things that I usually lay on my chart before I do any analysis. So it's just like the something that you need to prepare before the analysis. So this is something that I will prepare. So I will prepare using looking at the bigger trend, okay, and then to draw out the 20-day, the lines, and then the trend lines. And then if you can, you zoom out first. You zoom out meaning that you look at 5 years, 10 years, you know, zoom out and then see a overall picture. Then only you zoom in. And then when you zoom in, you must have the bigger picture in your background. That means at the back of your mind, you should know what is a bigger trend, okay? And a lot of time, when you are too close, zoom in too close, you can't see the chart pattern. And a lot of time, major changes occur when you see major chart patterns. So I would advise people to zoom out and look at the overall view and then to see if there is any chart pattern first, okay? Then only you draw out this GMMA line. And this GMMA line for chart analysis, you just need to click the indicator, okay? And then you can click. And for Bursa Station software, you can also see that there's a GMMA indicator in the Bursa Station. For those of you who subscribe to the Bursa Station, you can find this GMMA indicator there. So you do not need to draw lines like what I did for my Yahoo Finance. So for Yahoo Finance, you need to draw lines. You need to extract the lines out. Okay, you need to extract 12 lines out. Okay, so this is the background. Then the application. Using the GMMA, right? The main application will be, these are the main application. The term is called compression, crossover, and pullback. Okay, so these are the main application. So very often you will see that these lines, right? You will see some compression. Okay, and then you see some crossover. That means it crossed below. Okay, cross below. And then sometimes you will see pullback. Pullback meaning that it has a short pullback or retraces a little bit, and then it will resume the normal trend. Okay, so basically you have compression. Okay, the lines are compressing each other. Then you have the crossover and also the pullback. That means it's just a short-term reversal, but it's going to be continuing the main trend later on. So let's talk about the crossover, okay? So the crossover of the short-term and the long-term moving average represent trend reversals. If the short-term crosses above the long-term, it's the bullish, and then when it crosses below, it's called the bearish. Okay, so the degree of separation between the short and the long-term can be used as an indicator of the strength. So we can look at the lines, okay? Look at the lines. So we can see that these green lines, they are separating each other. It's like a fan line. Fan line meaning that they're not compressing, they're expanding. So how we look at this is that whenever you see compression, right, it means what? It means that you are losing momentum, and then most likely there could be a possible trend reversal. It's like there will be some changes in the underlying trend. So that's why the lines are compressing, okay? And then when you see that the lines are opening up like a fan line, it means that it is gathering momentum. So very often you see that you saw a compression, and then compression means losing momentum, and then you see expansion. You can relate this with the Bollinger Band. Okay, if you are familiar with Bollinger Band, you can relate this with Bollinger Band, whereby whenever you see constriction, there's some indecisiveness. And then whenever you see some expansion, that means the underlying trend is very strong. Okay, so over here, you can see that when the lines are expanding nicely, the long-term investors are holding well. Okay, these are the long-term investors that are holding well. So that means that they are supporting the short-term investors. So at one glance, if I were to look at it, right, what this tells you, this tells you that at least this tells me that when my green lines is doing very well, okay, on the uptrend, and then the lines are separating, that means the lines are very clear, they're not compressing. So these are telling me that the long-term investors, right, they are gathering momentum. So that means the long-term investors are holding on to the market. They are supporting this market, okay? And we have a lot of long-term investors participating in the market. You can look at this as a long-term investors participating in it. So if you are long-term investors, you look at the drop in here, okay? When you see that there's a drop here, the green color drop here, the price drop here, okay? Let's say you see that, oh, there's a price drop here and then the price drop again. So you feel very scared. You do not know what you should do, okay? But if you look at this GMMA, right, you see that this drop represents a dip here and then another dip here, but it didn't cross, really, it didn't cross below. And the green lines are still supporting it. So you will be rest assured that this is just a normal profit taking by the short-term investors. Okay, so this is how I look at it. So as long as I see that my green lines are supporting well, and then even though if I see a short retracement over here, I see some retracement over here, I can understand that these are all short-term profit taking. Okay, and when the red lines are compressing, right, turning down and then compressing, right, it means that they are doing some profit taking. And it is absolutely very normal for short-term investors to do profit taking. In any trend, short-term investors, after all, this is their rice bowl. They want to make money out of trading. So when they see profit, they will have to do some profit taking. And then after they do some profit taking, then they will resume the uptrend again. And then when they have earned some money, then they will profit taking again. So on and off, you will see that the red lines, right, will be going up, expanding, and then compressing, profit taking, going up again, and then compressing, which is represented by here, going up and then compressing, a sell down here, a mini sell down here, and then going up and then compressing, the mini sell down here, and then going up and then compressing, okay, up and compressing, and then all the way up here. So every time when you see that there's a sell down, you refer back to the GMMA, you see that, oh, it's just a small dip. You see the green line didn't even compress a little bit. It was very solid. Okay, so that means the long-term investor didn't even bother about this correction, this small correction. They didn't even bother because the long-term investors are still holding it. Okay, then when do you think the long-term investors start to get worried? Okay, so this is the time when you see that when the green lines started to compress. Remember just now we said that when the red lines compressing means profit taking, right? So when the green lines also compressing, it means what? It means that the long-term investors are also selling. Okay, so over here we see that the long-term investors, the green line, they are actually selling here, compressing, and then it is turning down. So turning down meaning that it's a bearish, so it's turning down. So it shows that it is profit taking, and very soon you see that there's a big crossover. When I say big crossover, it's because there's a gap in between. You see, when you cross over, right? Sometimes when you cross over, this red line and the green line still press together. That means it's not really a very clear crossover. But if you see a very clear crossover, you should see a gap in between like this. These are very clear crossover, which means the selling is very intense. Okay, the momentum is very intense. So you will see a big sell-off over here. Okay, then, and the worst thing is that the green lines expanding is crossing down and expanding. So in this case, the long-term investors are selling aggressively over here as well, together with this short-term investors. Both of them are selling. Okay, both of them are selling. Then after that, you cross over here. So when you cross over here, you see that the green lines are compressing again. So whenever you see the green lines are compressing, right, it means that there is a possible trend reversal. Okay, so the first time when you see this green line crossing over, compressing was because it was originally uptrend, and then they have some doubt, and then they turn down. Okay, the compression means that they have some doubt, and then they want to take shelter. And then if let's say you see that this green line when it was down, and then the green line start to see some compression. Okay, the lines start to press together. And of course, before the green line press together, right, you see the red line press together first. So when the red line press together, that means the short-term investors, they are doing the profit here, profit speculation here. So they sell and then they will buy and then they will sell, and then in the end, they will have to continue buying here. Because when you are going down, right, you are supposed to be shorting as a speculator, so you short. And then when you in rebound means that you buy back, okay, you close your position. And then when you want to go short again, and then you see that it's not really working, so even when you short, right, you see that these lines are actually compressing, so it's not promising. So very soon you quickly reverse the trend and then you buy. So when you go up and then you cross above it, okay, so when you cross above it, the red lines, you see that the green lines started to compress. So the green lines started to think that maybe there is a trend reversal. So that means what? That means the short-term investor, they jump into the boat first. Okay, because when there's a reversal, right, usually the long-term investors were the slow ones because they are too scared. Market drop too much, too scared. So they are the slow one. So who is the fastest one? The short-term traders, they are the fastest one. So they jump into the boat first. Okay, by showing you the sign of compression here. When you see the sign of compression, meaning that there's a change in the trend for the sell down here. Okay, you change from bearish trend to bullish trend. So same thing here, you change from long-term bearish trend to long-term bullish trend. So you see the compression here, and then you finally you cross above that narrow line, you cross above it, and then once you cross above it, this is the part where I usually look at it. Okay, I will see that whether this red lines, right, whether it will bounce off from this green line or not. Okay, if after it cross over and then it came down again, cross over down again, that means no use. You are back to your downtrend again. But however, if let's say you cross up and then you come down, but then when you come down, you just lying above the green lines, and then you reverses back. Okay, so then this is called a confirmation. Okay, you didn't go through, but you actually protected by the long-term investors. There are a lot of buying over here. Then the chart turns up. Okay, so over here it turns up here. So this is the point whereby if you are the long-term investors, right, you will start to buy at this point. So you will not buy at this point because only the short-term traders, they can spot this thing. Long-term investors, they wouldn't be able to spot this thing. So they can only spot it over here. Okay, then when the long-term investors join, then together with the short-term investors, so the market will move up. Okay, and along the way, as the market move up, then you see some short-term profit taking over here. Okay, then short-term profit taking over here, and another here. So this is the GMMA. You can tell so much of a story. To switch screen, I think she's explaining on the slide. Yeah, I'm explaining on the slide. Okay, later I can show you the diagram. You want to see the diagram? Okay. Okay, you want to see the live action, right? That one was a SPDR S&P 500. Okay, so this is the S&P 500. So you can see that the green lines are holding well. Okay, at certain point you have a cut down, but then After a while, it turned back up. And then over here, it's a strong green line where you can see the fan lines are spanning out. Okay, the lines are spanning out. And if you want to see the latest one, okay, let me show the latest one. You see the latest one, which is on the right hand side over here, the lines are opening up. And then you see the gap between the red lines, the purple lines, and the green line. There's a gap here. So whenever you see a gap, it means what? Strong momentum. Okay, so currently this is the strong momentum. But as I said, you need to draw a trend line. So usually after you see this one, right? So you have to draw a trend line. Okay, you draw a trend line. A trend line. Okay, it won't let me draw the line. Average line. Okay, never mind. So because usually I will analyze in the Bursa station. I'm used to the Bursa station. So I sell them on the Yahoo Finance. But anyway, you can draw a trend line over here. Okay, you can draw a trend line and then you wait for the trend line to be broken. If it doesn't break, you don't do anything. You just hold on to your position. Okay, so you analyze this GMMA together with the trend line. Okay, so the US stock market is still pretty is quite bullish. Okay, then let's see. So this another one is called compression crossover pullback. Okay, so this is another example that I'm using this GMMA on our KLCI index. Okay, later I will show you our KLCI index and then you tell me after we have done everything, right? And then you tell me what's going to happen. Okay, then you will know whether you have learned something or not. So that will be the test question, the quiz for today. Okay, quiz of the day. You guess the direction of KLCI index. Okay, so then this one is our KLCI index. So we can also using this to analyze our KLCI index. So over here, when you see that the sell down, and then you can see that it crossed over. However, after it crossed over, then you see that the short-term traders quickly compress it. Compress means there's a change of the trend. So the short-term trader quickly changed the trend. So after the short-term trader changes the trend, right? Then only the long-term trader changes the trend. So that means the short-term change the trend first, then followed by the long-term. So by the time when you pick up here, you're already up there. But the short-term trader already take advantage over here. Usually I look at, yeah, you can, but usually, as I said in the beginning, I usually look at the GMMA as a long-term investing for me, value investing for me. So if I were to look at the lower time frame, like 1 hour, 5 minutes, 15 minutes, right? It kind of like defeat the purpose because after all, these moving averages, right? We have like up to 60 days of moving averages. So these are like small short-term to long-term. Okay, overall, you are looking at both short-term and long-term, but overall it's kind of like a lagging indicator. So I don't really use it in a lower time frame. Okay, I use it on a daily time frame, daily chart or weekly chart. Okay, so I don't use it on a lower time frame because they are slow. Okay, suitable for long-term investing. Okay. Then the crossover of the short-term and long-term means this one. Okay. Okay, now we go to the application. So we have these 4 applications. So among these 4, right, the trend breakout, the buy in dip. So the trend breakout is for the traders. Okay, so if you are in for a shorter term trade, so this strategy is good for you. Okay, so if you are long-term investors, then buy in dip is good for you. And then these 2, exit well and bubble trading, these 2 are the exit strategy. It tells you when to exit. So these 2 are to protect yourself. Okay, so basically the strategies is the trader type of buying in strategies or long-term investor type of buy in dip. and then you have the exit strategy for both type of trading. Okay. Okay, the first one is the classic trend break. So for the classic trend break, usually you have to draw a trend line. Okay, you have to draw a trend line, and then usually I will use my my main diagram here, I will have a 200-day and a 20-day moving average here. Okay, just to see the trend. Then over here, you see that this is all the way down, right? It has been down, 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 and then break out the trend. There's a trend breakout. And 20-day moving average break above the 20-day moving average. And then it is going to break above that 200-day moving average. So if you want to be aggressive, right? So what you can do is that once you have a trend breakout, you can position yourself here, okay? And then if let's say you want to play safe, you wait for a retracement. So this is a small retracement. So when the retracement is so brief, so small, it means that the underlying trend is very strong. So because it didn't go down too much, okay, just go a brief retracement. That means people's eager to get in. They are not willing to see the share come down. So whenever there's a small profit taking, right, people just rush in and buy, so support the price. So you see only a small dip. Okay, and then after that, then you see that explosive. And this explosive over here is because you have the 200-day of moving average, which is the long-term trend line. You break above that 200-day of moving average. So it's very promising. So you break above it. Okay, but however, after a while, then you go down. Okay, so okay, now for certain stocks, right, somehow you need to know their behavior. So I noticed that for Axiata, right, they usually have this kind of behavior whereby you have a very strong bullish breakout, everybody rush in and buy. And then after some time, then it died down, and then it will die down, 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 down. Then go for another rally, and then you go down again. Okay, so for Axiata, right, it's rather good to have a short-term trade for this particular stock. Okay, and different stock will have their own behavior. So you need to understand the history, the pattern of how this stock behave. And for some of the US stocks, you can see that usually when you see a gap up, it will gap up and then all the way up, right? For the US stock market. But for Malaysia stocks, very often after the gap up, a few days later, it will gap down, or it will come down. Okay, lack of momentum. So that's the problem with the Malaysian local equity, lack of momentum. But however, these are the behavior of our stocks here. Except certain speculative one, then those maybe they are, they can be very hyperbolic rise. Those are those speculative ones. But for blue chip stock, usually you have this behavior. Okay, then you see that there's a breakout here. Okay, so usually you will have to buy on this straight line here, this vertical line. So there's a clear breakout here, and then you probably will buy along here. Then, and this point here is actually below the 200-day. Okay, it's above the trend line and the 20-day, but below the 200-day. So most likely you probably want to wait. Okay, if you want to wait, then when it break out, then you will get higher price. You will have to buy at a higher price. So usually for some of us who are more aggressive, right, you will have to anticipate. You will have to predict or to forecast that most likely it's going to break the 200-day, most likely. So before it break, you better position yourself first. Okay, so these are the more aggressive traders now. And another thing over here, you look at it, you can see that when you're on a downtrend, these green lines, right, will act as a resistance, a zone. Okay, just now when I show you, it was always on the uptrend. So you can see that the green zone, the green lines are the support zone, whereby whenever there's a short-term correction, it will dip and then it will bounce back, and then it will dip and then it will bounce back. It's always bouncing back from the green line. So that's, you are in the uptrend. But how about when you're in a downtrend? So when you're in a downtrend, these green lines, right, it's a strong resistance line for you. So you can't break through it. Okay, when you can't break through it, and then you're going to go down further. Okay, if you cannot break through it, and then you're going to go down, continue. So then this green line, when it's downtrend, it acts as a resistance. Okay. Now, this one is another trend break whereby you draw a trend line here, and then it broke above the 50-day and the 200-day. Okay, so you can, and then here you have a crossover as well. Over here, actually it crossed over, but then after it crossed over, it came down. Okay, so and then it bounced back again. So when it bounced back, right, it's actually a confirmation here, because it looks like this green line is supporting this short-term trader activity well. So you can actually buy in this manner. Okay, so then you can see this line go up. Okay, so I'm going to show you this chart. This chart was happened last year, November 2020. Okay, November 2020. So I observed that there were a few consumer stocks that were having this behavior, and those stocks that are relating to the opening up economy. Okay, so they were having this trend. So this trend meaning that you have a downtrend, down, 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 and then these are like down from 2018, 2 years, 3 years, no, 2 years, yeah, down for 2 years already, and then it has been down below the 200-day moving average for 2 years as well. Okay, then after down, right, then you see that this GMMA also going down, 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 down. Okay, then finally you see that there's this breakout over here, and coincidentally you see that the trend line also break out and also break above the 20-day moving average. But the 200-day moving average, there's a distance, there is some distance here. Okay, but you can position yourself first. So actually over here, right, you can actually position yourself, because this is the classic kind of a trend break that I always go for, especially in this pandemic time, in this recession time. How often do you see this kind of a trend? Especially this is like a big name, branded name, branded name as in the company logo is everywhere. You won't see that, you know, it's everywhere. So it's a branded. So these are the branded companies that I like to accumulate. And then if you to see, right, so you will have a breakout here and then a breakout here. So usually before I cross this 200-day moving average, then I will buy already. Okay, but I won't buy a lot. I will just buy some of the money. Then when I see that it's finally break above the 200-day, and then it retraces, and then when it retraces, it retrace above the 200-day moving average line. So it's a confirmation. Then maybe here you can buy some more, and then the price going up. So over here you can see that this also retraced, and then it bounced back from the green line. Then this one took off. Okay, so this one is the trend break. It's the most recent example, okay, which is last year November. Okay, would you be able to share how to know when to sell? Okay, later we have two exit strategy later. We just look for the buy first. Okay. Then this one is another one whereby you go all the way here, then trend break. All right. So same thing. Okay, you buy around here. Or otherwise you wait until it break the 200-day and then resting here, and then you buy. So this one also trend break. And then Asia also. Where's my GMMA? Okay. Okay, anyway, it's also go down, 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 and then you have a breakout as well. Okay. Okay, the next one is buy in dip. So this buy in dip is actually good for a trend whereby the underlying trend is already a bullish trend. So what you are supposed to do is that you buy in dip, buy during the sell down. Okay, and this sell down is just a mini correction. So you buy whenever there's a mini correction, and then you hold on to it, and then you buy another time during a mini correction, and then you hold on to it. So this is like buy and hold strategies. So this strategy is different from just now. Just now was a reversal. This one is a continuation. So this one you continue to buy and hold for this one. And in this using this strategy, right? Usually we will ask ourselves this question: is the underlying trend strong? Okay, whenever you buy in dip, right, you have to ask yourself whether the underlying trend is strong or not. What if after you thought that you are going to buy in dip, but in fact it was a trend reversal? Then that will be very scary, right? Then you see that your everything will be upside down. So then you have to understand that whether the underlying trend is strong. So one way is that looking at the green lines, whether this green line is very steady. Okay, there's no compression at all. So we can see that these lines are very steady. Okay, no compression. So that means that these are just profit taking. The speculators are just doing their normal profit taking. We are not so concerned. I'm the investor. I'm not so concerned. So I'm happy that they do some profit taking. Then if I have the money, then I'll just buy in dip. Then over here, I just buy in dip, buy in dip. Okay. So that's underlying trend. So this underlying trend depends on the green line is strong. Okay. So later I'm going to test you all this. So you have to listen carefully. So is this price collapse temporary or the start of a new downtrend? Okay, so that's why you need to look at the green line, whether it is strong enough and whether this collapse here, is it temporary or permanently? So if the green line doesn't compress, means that this is just a temporary collapse for the red lines. Okay. How can I enter at the lowest possible price just prior to a rebound? Now, this lower at the possible price is very difficult if you are a long-term trader, I mean long-term investor, because usually for long-term investor, you wouldn't even think about it until here. Okay, so for long-term investor, the best place for you to buy is actually here, okay, which is this area here. However, for short-term investors, right, they can always buy when they start to see the lines, the red lines compress. Okay, so if you're short-term investors, you want to be aggressive. The minute you see that your red lines are compressing, maybe that's your opportunity. It's a trend reversal sign. Okay. So by indeed, we examine three features: the degree of the separation and the compression in the long-term group of averages, the degree of separation and the compression in the short-term group of averages, and the degree of separation between the groups. Okay, so basically we look at the red lines, whether they are compressing or expanding. Okay, so if it's expanding, okay, let me ask you, when the green lines are expanding, is it strong momentum or weak momentum, the green lines? When the green lines are expanding, is it strong momentum or weak momentum, the green lines? Okay, very good. Okay, that means you are listening. Okay, when the red lines are compressing, okay, when the red lines are compressing, what does that mean? The red lines are compressing. What does that mean? What are they doing? Reversal, profit taking, yes, ST Ng, okay, take profit, very good, okay, very good. So when the red lines are compressing, it's profit taking, okay. So and also means that they're actually selling. So when the green lines are compressing, also mean that the long-term investors are also selling, okay. Okay, so the third strategy is to exit, okay, exit well. So many trends roll over slowly, making it is easy to convince ourselves the trend is pausing rather than changing. Sometimes when what we see that the trend, right, it get weaker and weaker and weaker. So we do not know whether this dip, right, okay, this dip, is it temporary pausing or it's the underlying trend is reversing. Okay, so how do we know? And then these slow collapses give us plenty of time to fine tune and exit, but only if we recognize the beginning of a trend change. Okay, so if you to look at here, so usually when you see this the green lines, okay, going up. So whenever you see that the green lines is going up, right, in the on the uptrend, and then you see that these buy in dip, okay, when the red lines are compressing and then profit taking. Sometimes when these short-term investors, they overdo their profit taking. What do you mean by overdo? Overdo meaning that they sell down too much. Okay, there's a reason for why they sell down too much. The main reason is that why these short-term traders want to sell down is because they feel that the underlying trend may not be sustainable. Okay, if they feel that the underlying trend is sustainable, right, they just need to sell down a little bit because they know that the underlying trend is strong. They will quickly come back to the market and then they will just buy in again. So therefore, when you see that this red line is crossing down, okay, so it's actually a warning sign. If you, let's say you see that this red line, right, just touches the green line, then it's not so worried. Okay, over here, you see that this compression, right, didn't even touch the green line. You see there's a gap here. That means what? That means even more powerful, okay, even more strength here. So here, number one, the compressing over here, the sell down here means that it didn't even touch the green line. It means that there's full of potential here. Okay. Then over here also the green line are expanding and then it didn't even touch. That means yeah, going up. But then here started to touch this thing. Okay, meaning that there's a deeper correction here. So started to touch here. And then here it crosses down. Okay, so even deeper correction here. But this deeper correction is supported by the 200-day moving average. So that's why I like to bring in this 200-day moving average, because very often, right, if there's a rebound, right, it should be rebounding above from the 200-day moving average. So then it crosses above it, crosses below it. And then after crosses below it, it touches the 200-day moving average, a short brief, the next day rebounded. Okay, so that's fine. As long as you do not cross over, then you're fine. Then you see that you go up again. And then here comes another sell down. Okay, and this sell down, right, you see that the red lines actually cross down and there's a gap here. Okay, cross down below the green lines and then leave a gap there. So then this is rather bearish signal. Okay, so then you see that sell down, sell down, sell down. Then you have a rebound. This is what we call a temporary retracement over here. And if you see that this green line, you cannot cross above the green line, that means that this even weaker. The strength of this underlying strength is even weaker. That means this green line are compressing, long-term investors are selling, and then together with the short-term investors are also selling. And then the worst thing, this short-term investors line cannot even cross above the green line. Okay, so they cannot cover, they cannot go back up to the uptrend. So they are being beaten down, okay, beat down again. So beaten down again, and over here you see some drawdown over here. And then it touches this green line again, 200-day moving average line, and then it rebounds. Okay, so when it touches again, right, so that means there's some support over here, then this line took off. Okay, so it took off. And sometimes when you cross over, right, you do not enter first and then you wait for the retracement. And until this retracement is above the green line, then it's a confirmation. See over here, you cross down. It didn't cross up and then it crossed down again. And here you cross up. There's a small gap here. There's a cross up here. And this cross up is followed by a retracement. And the retracement is above the green line. So there's a confirmation here. So then it go all the way up. Okay. So then when it goes all the way up, you see some speculator, trader profit taking over here, but the green line is strong. And then over here, there's also another profit taking over here. Okay. So when you see that this sign, right, how do we know whether the sign is weakening? Is when you keep pressing the green line. You keep testing the green line's limit. Okay, so this is what I say that I call it to test your limit. So sometimes when you want to test that person, whether that person is good to bully or not, so you just bully a little bit, and then you just want to test that person's limit. So same thing here. So if you want to see whether this green line can be bully or not, so you just test here. Okay, press here, and then go up again, and then you press all the way down here, and then go up again. So that means it's all weakened here. So the sign here is actually very weakened already. Okay, then finally although you go up, right, but then this has shown that the underlying trend is weak. All right, and then when it costs down, then actually it's a sign opposite. Okay, so that's one way. So that means you look at the historical pattern here to see that the trend is weakening over here. Okay, and another way of looking at it is that you see together with the chart pattern here. And over here, right, you see that there's a double top here. Okay, and whenever you see a double top here and then followed by a cross down, okay, a double top followed by a cross down, this one is very bad. Okay, it's very bad. So that means that there's a double top, and then cross down is because of this chart pattern. Okay, of course you have to draw a trend line, and then this trend line also violated. So you have a double top, and then violating the trend line, and then this also cross down. Okay, so the one way of looking at the application of the GMMA in terms of the exit, excuse me, is that you look at the behavior in this past trend to see that how many times it is testing on the green line. Okay, so you saw that it was having some compression. So that means there's some some confusion over here or indecisiveness over here. Okay. Because in real life everyone will have a limit, don't you? Okay, stock market and real life experience can be relevant. Okay, right. Okay, so therefore we can see that this will actually cross below, and then which means that it's a, and there's a gap here. The important thing that if you see that there's a gap here, it means that the is a sell down, and this momentum is a strong momentum. Okay, so this is one. And another thing is called the bubble trading. Okay, so this bubble trading is whenever you see a bubble. Now how do you see whether you have a bubble? One way is that you see that this run up is a very steep run up. It's called hyperbolic. Okay, hyperbolic run up. And so in establishing the hyperbolic run up, right, you see that there's this bubble forming. Okay, so then sometimes after this bubble, right, then there will be a sell down, a sharp sell down. And how do you know whether this sharp sell down, right, is temporary or for sure? Okay, it could be that short sell down and then it resume up again. Okay, so we're going to look at some examples. So usually I look at this as how to get out. Okay, how to get out. So there's one example here whereby you look at this GMMA. Okay, so you see that the first sign is that the short-term investors start to compress. So the short-term investors start to leave first. Okay, leave, and then it crossed below that red lines. And then when it crosses below the red lines, you see that the red lines are compressing. Okay, so therefore, and then there's a gap. So over here, there's a very strong selling down momentum. So then this thing, when it cross over, then it is kind of confirmed. Okay, another way of looking at it, right? I look at it as the pattern. So if you see that there's a bubble followed by a double top or a chart pattern over here, then you can actually leave before this thing happen. Okay, because whenever you see a chart pattern, right, that is actually a sign that telling you that it's going to reverse. Okay, even before it cross down. Okay, when you see a chart pattern, it's going to form, right, then you have to reduce some of your position first. Maybe you may not want to reduce all, but you reduce some of your position. Okay, so let me show you some of the real life chart. So I will show you some of the real life chart over here. I want to show you the Bitcoin. 2017. Okay, I'll show you the 2017. I wouldn't say now is I dare not say now is a bubble because many people say that it's not a bubble. So if I say it is a bubble, then everybody will scold me. So I will not say that it's a bubble. So I just want to show you some charts, some facts and figures. Okay, so we turn back the clock to 2017. Okay, we turn back the clock to 2017, and then we see what happened in the history. Okay, then we relate what happened now, and then we see if there's any correlation. So this was 2017, and the Bitcoin was at 900 level, 900. Then very fast, 2018, it ran up. Okay, 2018 it took off, and then by the whole of 2017, then it ran up, and then really when it took off, right, it's actually end of 2017. Okay, on October 2017, it ran up all the way. Okay, then over here you see that all the way here is what was the top here? 17,000, right? So this is what we call a hyperbolic run. A hyperbolic run. Hyperbolic means that the curve is so steep. Okay. Then you look at here, 17 from 900 to 17. Actually, it's about 900. About let me round up to 1,000. 17,000 divided by 1,000. So it's 17 times. Okay, 17 times. So this is 17 times. Okay. So you are looking at 17 times of a run up, and then what happened? Then you see that this green line is the GMMA line. Okay. Then you see that there's a sell down over here. So this sell down, right, it crosses right across the GMMA line. If I can zoom in a little bit. Okay. So you can see that this line here. So every time when it crossed below, right, then it started to go up. Every time when it crossed below, it started to go up. So 2 times already. So that means that it is testing the limit over here. And then this one is also testing the limit over here. Then you see, this one tests another limit. And then this one was a brief one because this was a brief sell down. Unlike this was quite a major sell down. This one was a very steep sell down. So when you see that a brief sell down, right, it means the inherent strength was there. The inherent, that means the inside the strength was there. So you can see that this followed by a very sharp hyperbolic run up. Okay. Then it ran all the way up to 17,000. All the way up there. Okay. So here will be testing the limit, testing the limit, testing the limit, and then run all the way up there. Okay. Then what happened? So we move a little bit. Then there's a big sell down over here. So when you see a big sell down over here, right, it crosses across all the green lines with the tail there. Okay, and then it have a strong rebound here. Okay, then it go all the way. Okay, it go up again. Okay, it has a strong tail here. It didn't cross 100%. It just crossed up to here, and then it go all the way up. And then when it go all the way up, and then it come down again. Now, do you see a double top here? Okay, do you see a double top here? Yes, right? We see a double top here. So usually when you see a bubble trade, okay, followed by a double top, then you see that there's a neckline here, right? You can draw a neckline here. So once this line break below the neckline, you see that there's a sharp fall here, okay? And every time when you see a sharp fall, right, what is the next thing that you need to, let me test you. Every time when you see a sharp fall, what is the next thing that you need to observe? Okay, let me test you. Every time when you see a sharp fall, okay, what is the next thing that you need to observe? Can anybody tell me? You see a sharp fall, okay, a big sell down. How do you the separation? Okay, beside that, I'm more looking at the price action. What happened to the price action? Volume, okay. Rebounds, Johnny, you are right, rebounds. Harrison, you are right, rebounds. Rejection, after the rebounds, then will be the rejection, okay. So Azru, after the rebound, then will be the rejection. Okay, very good. So I have all the answer there. So that means when you see that the sharp fall, right, then immediately you are waiting for, usually for me, I'm waiting for the next rebound. Okay, I want to see how strong is the next rebound. Is it a strong rebound? Okay, is it a strong rebound or is it a weak rebound? Okay, so in this case, let's see. Okay, So, but you have a weak rebound here. So the weak rebound followed by a rejection here. You see, the rejection is this green line become a rejection line, whereby there's a gap over here as well. So that means that this rejection is pretty strong. That means this green line, right, didn't even let the purple line to touch them. They said, go away, go away. Okay, so that means that it's really very bearish. Then it fall all the way down. Okay, fall all the way down, and then suddenly you have a strong rebound, and then this one trying to break above the green line. And then after a while, then because here is so steep, so that over here you can actually draw a downtrend line, downtrend line, downtrend line, downtrend line, and then you see whether this rebound can break that downtrend line, right? So in this case, after you see that it cannot break the downtrend line, it further drop. Okay, further drop, drop, drop. Okay, drop all the way. Okay, then it try to break up again. Then over here, you can continue to draw downtrend line. Okay. How to create now? You see the add here, you add the indicator. Then you see the moving average. So you click the moving average, and then you add one by one. So let's say the first one is the 3-day, and then you save, and then this 3-day line will be up there. And then the next one you click again, and then you click 5, and then save, and then the line 5 will be there. And then you click 8, and then the 8 line will be there. Okay, so one by one you add here, you click indicator one by one. So you see that here. Okay, all the way down. Okay, then let's see. Just now we see that the price action is 17 times, and then the time frame. Okay, let me measure the time frame. The time frame is from October 2017 until this is the here will be the July January 2018. Okay, October 2017. May 2017 and January. Okay, May, 9 months. Okay, 9 to 10 months. So the time frame is that from here to here is 10 months, 9 to 10 months. And then the price action is 17 times. Okay, you remember here. Okay, let's see. Okay, now we are turn back our clock now to the present. Okay, we are now oops, we are now here. All right. Okay, so we start from here. Okay, so can you tell me what is this time frame? It's October 2020. Okay, October 2020. So now we are in April. Okay, if let's say we are looking at 9 months, right? It should be August. It should be August this year. Okay, so in terms of the time frame, we are not there yet. Okay, then let's take a look at the price here. So this one is 100. Okay, 100. Now what is it now? The top here is 63. 63 divided by 11. So it's 5 times. Okay, about 5 or 6 times. So in terms of the price action, it's 5 or 6 times. In terms of the timeline, it's less than the 9 months or the 10 months. Okay, so I can say that maybe the time is not arrived yet and the price action not arrived yet. So we will see what happened here. So we see that there's a sell down here, and then after the sell down, we're going to see the rebound, right? So very soon, if you can, you draw a downtrend here and then see whether it can pass through that downtrend or not. So if it can pass through the downtrend, then it should be resuming the uptrend again. Okay, but now, right now, we can't tell whether it's going to fall down further or it's going to rebound up unless we see the rebounds here. Okay. Trading view doesn't have, that's why. Maybe I didn't find it. If you can find, you see whether I have or not. Okay, so because I see that it's not there. Okay. Somebody asked me to give test already. Okay. Can give test. Quiz. Buy or sell. Okay, you look at this situation. This one, the line is, the red line is like this. Okay, now it's like this. Okay, so buy or sell. You look at the GMMA. Buy or sell. Okay, sell. Because another way, okay, if I don't tell you it's Supermax, right? If I don't tell you it's Supermax, then maybe you will be thinking, because whether this one will cross the 200-day moving average or not. But in this case, this is a triple top, 1, 2, 3, a triple top, and then followed by very close to the 200-day moving average. So if I were to hold this right at the point here, I probably will have to reduce my position. Okay. Oh, I see. TradingView only has GMMA in public library, but not their built-in script. So that means what? That means cannot use lah. Okay. Okay. Quiz number 2. Buy or sell. Okay. Buy or sell. You see this thing? If you want, you can draw a trend line. You draw a trend line and then you see what happens. Buy or sell over here. So now you're looking at here now. So are you buying or selling? Okay. Okay. Good. Very good. Okay. So you are learning. So we're picking up very fast. Okay. This one, buy or sell. Also same thing, right? Same thing. Yes. Okay. Very good. Okay. This one. Now, interesting. This one is a tech stock, and then the 200-day moving average is is a bit far from there. Okay. And but it crosses down, but then crosses without the gap. Okay, crosses without the gap. Gap meaning the white color gap here. Okay. Okay, wait and see. Yeah. So I'm going to show you. Actually, yeah, I didn't print the latest one. Actually, for the gray tag, right? It reverses. Okay, so it reverses, and then now it's up there. Then this one is a 3D printer, 3D printing. So you see that this 3D printing is having like a bubble here, hyperbolic run up here, then followed by a crash. Now this crash is so deep, right? And then when it rebounds, right, it didn't even rebound more than 50% Fibonacci retracement, not even 50%. So then this trend continue. Okay, like the GameStop, yeah. Okay, so sell, yes. So this one definitely you sell. And this one, the green line is act as a resistance there, so you can't break through, so you have to sell it. Okay. So this is G-Tronic, okay, and this is March 26th. So G-Tronic, do you buy or sell? Okay, the GMMA, I forgot to bring it up. Okay, never mind. So actually, this is a crossroad. Usually, I will wait and see first, okay, and see what happened. Because this one is a technology sector, so I'm not that bearish because the sector itself is a good one, okay. The sector itself is okay, but this stock is weak. Okay. Yeah, horizontal. It is horizontal. And if you notice, right, G-Tronic is different from other technology stock is that it is always horizontal. It is good for horizontal trade. Okay. Okay, then the GMMA is like this. So after you see this GMMA, right, actually it's rather negative. Okay, so okay, then we go to the Bursa KLCI index. All right. Okay, this is KLCI front cam. Oh, here, KL A gray tag. Okay, I have to KLCI. Okay, let's see. Yeah, this one is our KRCI. Can you see? Let's see if I can make it. Yeah. Okay. Yeah. You see that we were all the way down, right? Now we finally break above the green line, and then at one time we break below the green line, and then now we are hovering around the green line. So over here, right? What do you think? What is the approach to our index? What do you foresee for our index? Do you buy, you hold, you sell? What is your plan? Yeah, it's sideways. So what would you do now? If let's say you are supposed to buy short futures contract, the FKLI. Okay, wait, hold, wait to break out, reduce. Because now it's in indecisiveness over here is horizontal. Okay, so when it's horizontal, right? Usually we want to stay on the sideline because it can break out in the upper or lower. It can do both way. And another way of looking at it is that you draw a trend line here. Okay, draw a trend line and then see that it is still supported by the uptrend. Then it is still safe. And also another thing is that you see that the green lines are compressing. Okay, and so the green lines are compressing, meaning the long-term investors are also thinking of not to go in anymore. So they are wait and see, hold there and wait and see. The reason why I think as a long-term investors, right, I wouldn't want to sell at this moment because we are at 1,600 points. So at 1,600 points, it was back to the 10 years kind of a level. So this level is actually not high. So if let's say you have the spare money, right, so you just hold on to it and then wait and see. And another thing about the GMMA does have their limitation because it is a moving average. So therefore, the limitation is that it is not good to analyze horizontal trend, okay? Because for all the moving averages, right, it is only good for a trend prediction or trend analysis. So in essence, right, GMMA is made up of moving averages, and moving averages is actually meant for trend. Okay, you're gonna see the trend whether it's uptrend or downtrend, and then when it's on a horizontal trend, right, you can see a lot of whipsaw over here. Okay, the red is above the green. Yeah, that means it's short-term bullish. When you see the red is above the green, right, it is short-term bullish. So I can zoom in and see it's a short-term bullish over here. Okay, but overall, right, you can see just now from a bird eye view, because if I zoom in, then I see it very close. If I were to zoom out, right, it was a horizontal trend. Okay, usually a horizontal trend, it means that not decided, undecided. But over here, you can see that it is above it, the red above the green. So that means it's short-term bullish. Today is a hammer. Hammer is good. Hammer is good. Okay, today is a hammer. So hopefully tomorrow we see some good things here. Can you explain a weekly chart? Let's say this one is a daily chart, okay? So if you want to look at weekly chart, right, weekly chart is usually for really long-term investor, okay? And then when we see this long-term weekly chart, then we see that actually for long-term investors, they are not even bother to take profit at all. You see, the weekly chart, the long-term investors are holding on very, very well. Okay, so if you are looking for weekly chart, definitely you are looking for the long-term investors perspective. Okay, so if I were to look at it, the long-term investors are holding very well. You see, the line not even compressed, it actually expand. Okay, the line actually expanded. So that means what? That means that when it was horizontal that we saw just now, right? The long-term investors are accumulating the Bursa Malaysia stock. Okay, they are accumulating. You see here, when the long-term investors are selling, this all down, 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 down. So when it compressed, and then now we are looking at the here, okay. But on the monthly chart, green is above red. Okay, let's see the monthly chart. the monthly chart. So this one is monthly chart. Okay. So if you look at the monthly chart, right, you see that it is very bearish in the sense that the red line is actually below the green line. Okay. And however, this red line is trying to go in, touching the green line over here. Okay. So although the green line is expanding, okay, but I see that these red lines are actually going up. Okay, so I would give it like a a doubt whether I wouldn't say that these long-term investors are really selling our Bursa stock, because we are actually at a very low level. 1,006 is a very low level. So I would believe that long-term investors are still holding well. And then now it says that the short-term retailers are not into the market yet because of they are just wanting to wait and see. Okay, but however, the long-term investors, I would think that they should be going up again, because after all, this monthly chart, right, is a very lagging, very lagging indicator. It's a really lagging indicator. By the time when you see that this thing cross up, right, the daily chart is already all the way up already. So sometimes monthly chart is too lagging. I wouldn't want to look at it so much. I just look at the weekly chart and the daily chart will do. Okay. Somebody say no market tomorrow. Oh, is it Thursday? Okay. All chart is lagging. All technical indicators are lagging. Okay, maybe we say that all technical indicators are lagging. That's why you need to use the trend line and the chart pattern. These two are the forward-looking one. The chart pattern is the forward-looking one. Trend line is forward-looking. The indicators are the backward-looking, the lagging indicator. It's just that using the moving average, the GMMA, is good, that it gives you a guidance. Okay, and then it explains to you what the short-term investors, short-term traders, and the long-term investors are behaving. The important thing that is that it tells you how they behave. So that's the most important. Okay. Okay. So only candlestick can predict well for day trading. Yeah. I would think that candlesticks, right, is good for three candlesticks like this. This one is actually when you see that you have this thing in the top part, is actually negative. It's the hanging man. Okay, so that's why you have down. It's good for 3 days or 3 candles. Okay, then up. Then now is doji. Okay, which is indecisiveness. Okay, so tomorrow holiday, trade on Friday. Okay, good. Tomorrow holiday, so trade on Friday. I love day trading. Malaysian market suitable to trade short term. Okay. If you like day trading, then you should turn to the US market or the the US market. Okay, or the derivatives market. Trade short term. Okay. So if you like the short term trading, right, you can turn to the cryptocurrency, and then the derivatives market, and also the US market, and those are really short term. Okay, and the explosive move is tremendous. And for the Bursa Malaysia stock, it's good for investors. Okay, investing style. Okay, of course you have those speculative ones, but I never really bother about those speculative stocks, because I just focus on value investing. Okay, and if I really want to do short-term trading, right, I will go to the futures market. I wouldn't want to speculate on the penny stocks. Okay, GMMA not suitable for hourly chart. Yeah, agree. Not suitable. Okay, agree that short-term in US market is better, more volume. Malaysia, not so many people buy sell. So volume still okay. Yeah, volume still okay whenever you when we were last year. Back to the last year, the volume was very okay. Now coming to this year, kind of like losing momentum already. Okay, so what have you learned today? Okay, so now Okay, so now I will pass back to Shane. We have actually learned a lot today, and you may ask me questions. Okay.
All right, thank you so much, Pauline, for sharing with us a very, detailed,
Mm.
presentation on how do you use Guppy multiple moving averages, this indicator in plotting our buy and sell signals. So, if any question for Pauline, I think we only have like 5 minutes left for questions. All right. So I think along the way, Pauline, you also helped to address some questions along the way, already, right?
Yeah, that's right. But I saw
Yeah.
some question I haven't answered yet.
Yeah, could you pick a few that you would like to answer?
Yes. Can I really solely rely on GMMA and the trend line as a value investor? Mm, actually, for me, right, I will look at GMMA, but not solely because you need to rely on the fundamental as well, right? So it's just that this GMMA is giving you a guide, telling you the behavior in the technical analysis perspective. As a value investor, right, what is good is the fundamental is really what is the thing that you need to. I would focus 80% on the fundamental, and then 20% on the technical. And therefore, this GMMA, if you want to really use it as a tool for your value investing, you identify your value stock first, put it in your stock list. Okay, identify your value stock, put it in your stock list or watch list. Then only use this GMMA as a timing tool to buy and to sell. Okay, so I still think that you cannot solely rely on GMMA. For hourly chart, any indicator to introduce. Okay, for hourly chart, right? Now, I look at it, I will usually use my 8-day moving average, 8-day moving average, and then apply onto the 15 minutes and 30 minutes chart. Okay, this is for my futures, which is the KLCI, FKLI, or SCPO. So I usually apply 8 days moving average onto the price, and yeah, 15-minute and 30-minute chart. Then
Okay, next question.
could more about the bubble pattern. Could please share more about seeing the bubble pattern? So the bubble pattern is actually, you see that there's a hyperbolic run up. And then when you want to see what's going to happen, right, I refer back to the history of the bubble and how's the behavior. And then I try to relate to the current bubble, see if this bubble is, when will it burst or something like that. So just now we already show you how we can relate that. And one very important thing is that when you see a bubble, right, you really have to be really short term. You have to monitor your chart very, very closely, and then you have to stay very short term. Okay, just in case bad things happen, then quickly you can exit the market. Okay, then don't know the cannot. Okay, can you recommend which indicator for hourly? Okay, that one I answered already. So for the hourly chart, it's the 8 days moving average. Okay.
Okay,
Also,
Pauline, there's a question by B Pin. Like compression of red lines and green lines means profit taking. Does it mean reversal too?
So whenever you see a compression, right, it means some profit taking, and it could be a potential. Okay, I wouldn't say 100%. It's a potential trend reversal. So if let's say, then how do you see whether it's a trend reversal? Is when you see the direction of the curve, right, actually changes. So it was originally uptrend. Then this GMMA lines, right, which is made up of all the moving averages, started to turn down. Okay, so then there will be a trend reversal. So good question. So compression, it's that means the selling happening, profit taking, and then if you sell for too much, right, then you can actually lead to a trend reversal. So that will be represented by a turn in the direction of the moving averages.
Okay. Now Beng Hee would like to know, like, is GMMA only good for stocks when there is heavy participation from retail traders?
Yeah, as long as the volume is there, usually all the technical analysis, right? All the indicators, it is good for high volume stock. For low thin volume stock, you can't really using that well with the technical analysis. So therefore, same thing, GMMA is a indicator, so it has to be applied to all the high volume stocks. And whether you are penny stock or value blue chip stock or whatever, as long as high volume, then you can use it.
All
Wow.
right. So yeah, I think the time is up for Q&A sessions. I think it's 10 o'clock right now. So thank you so much for asking questions along the way, and Pauline also addressing questions along the way throughout the presentation, but not leaving the only the last part for Q&A lah. So thank you so much everyone for your participations.